Welcome back to my channel, everybody. Today we have special guests. We have Matti Greenspan from Quantum Economics. Thanks so much for coming today to the show.
Thanks. Thanks a lot for having me.
Yeah, awesome. So I'm super excited to have you on the show and talk about technical analysis and fundamental analysis and what's the current state of market right now because there's many like layers of like the many reasons that I was kind of excited about because first of all, like you're a super interesting person in terms of the background. You're, I believe your grandfather was a billionaire. Is that correct?
Yeah, he's a self-made billionaire, rags to riches. That's a really interesting story.
Oh wow. Okay. Yeah. I yeah, I googled it and then that came up. So I
Yeah.
kind of wanted to kind of get into like how your life was influenced by that like figures and stuff like that. But also you started paper trading when you were 13 years old. But then I realized
Correct.
you are musicians as well.
I did. Yeah. Wow. You really dug there. I spent 3 years in head music college of Tel Aviv. I can play guitar, clarinet, flute,
Oh
uh,
wow.
saxophone. Yeah. I don't often. I have kids now, so.
That's awesome. Yeah.
But in
So
theory, I can. Yes.
yeah. But so yeah, I was wondering, yeah, so like so that really caught my attention is like that's super interesting background. And and you're also like super popular person. You're in basically everywhere, like Bloomberg, CNBCs and all that, and talking
You
about the
flatter
market.
me, Yuski.
No. I mean that's a fact, right? So yeah, so let's I'm just yeah, excited about that. But anyway, maybe to start the conversation, maybe could you tell us your life story, like how kind of how you develop your interest in this like trading and finance, but also kind of got into like music and how that merged together.
So, I'd say when I was 15, 16 years old, there was a rabbi that told me, because I'm from a religious background, from
Mm,
a Jewish religious background, and
yeah.
he told me if a man tries hard or figures something out, he can make a sustainable living within 20 minutes a day. And it blew my
Mm,
mind at the time. Like, how that's not possible. 20 minutes a day. Like, this is like,
mm.
20 years ago or so. Like, before the internet really caught on. And like that, there's no way. And then now I'm finally starting to see that this can actually become a reality. I kind of made it as a goal at that time and kind of pushed towards it little by little.
Mm.
And I think that now, it's something that's possible. And I've always loved video games
Oh.
since being a child. And at some point, I said to myself, okay, the markets, the financial markets, this is like a video game.
Yeah.
And that was my new video game that I would pour all of my time and energy into figure out how do you beat the game.
Oh, I see.
And this is really where the passion came from because I just see it as fun.
Did someone introduce that like trading to you, like your family member or?
Yeah, I mean, I've always been interested, like you mentioned. I mean, I've been paper trading since 2013. That started with gold. Obviously, at the
Mm.
time, gold was trading at some, $300 an ounce or even less.
Wow.
And my mom told me, hey, the price of gold will always go up. So then I thought about, this as an investing principle and started tracking it and that crude oil as well. And
Mm.
I would speak with my grandfather about this kind of things about investing a lot. And even, obviously he's in his line of work and his business, he's very open with the family about how he conducts his business. And, that he even plays games with his grandchildren about negotiation where we have to negotiate with him,
Oh, really? Wow.
so these are like the type of things that are kind of ingrained in as a part of who I am.
I see. Interesting. So then you got into music.
Yeah.
afterwards?
Uh, yeah, kind of a rebellious phase, I suppose.
Oh,
Um,
you want to kind of try something different, I guess.
yeah, I was obviously have a passion for music, and I wanted to see, okay, maybe we can do something here. Maybe we can, become famous or something like that. I think that a lot of the stuff that I learned in music school, maybe not like music theory and stuff like this, but especially about stage presence and how to conduct yourself in front of a large number of people. I mean, those are certainly things that helped get through things like a live television interview where
Oh,
all of a sudden you have, oh my gosh, like so much pressure and stuff like that. Okay, there's a breathing exercises for this and stuff like that.
interesting. I never really thought about that from, I mean, that perspective, playing instrument in front of peoples and stuff like that. I
Yeah,
see.
in music school they focus a lot on those type of things. Like
Oh,
how to get rid of the nervousness and things like that. It was a large focus in school that I went to.
oh, interesting. But if I think about it, like, kind of makes sense. So, okay, so you went to school in music, then could you maybe tell us your story afterwards, how that leads to quantum economics where you are right now?
Yeah. So while I was in music school, I met my wife.
Oh,
Um, I was 21 years old, and she said, "Well, you're not making it as a musician. You're not famous yet, so get a job."
yeah.
And I had a friend who lived down the block, and he helped me, put a resume together, and said, "Okay, look, in Israel, if you speak English, you get a job instantly." Um, he said that. Now I figured out that it's not actually true, but at the time it was quite easy. It was just he
Mm,
showed, he gave me a few tips. How do you do the interview and stuff like this? And I got a job at a telemarketing firm where I was calling people up to sell them green card lottery service, which is United States service that they have like every year that they give out green cards to people,
right, right.
and we were processing applications, and they gave me a really good crash course in telephone sales and online sales in general, which just made it much easier to switch over to the financial industry, where I went in 2008. I got a job at AvaFX. And the lady who hired me said, "Yeah, I put a star next to your resume because you worked at DSNR, which was a really, really popular telephone sales group." And they're like,
Mm.
"Yeah, everybody we hire from them is amazing." So we just, it was basically a shoe in. And plus, I was interested in financial markets. So, that was a real, real natural fit for me. So I get to watch the 2008 financial crisis, from within an online broker, and watching obviously the how the news plays into what's going on in the markets, and how the client's psychology, because I was holding their hand for the entire journey from the time they make their first deposit ever,
Mm.
and obviously until um, most of them at the time, I think the statistics at the time of people making money in financial markets were much worse than they are today. Um,
Mm.
so just going through that whole process, and then of course I got a job with eToro in 2012, where they're one of the leaders in fintech and financial technology and cryptocurrencies. And the CEO, Yoni Asia, actually gave me my first Bitcoin in 2013,
Oh.
when it was $30 a pop.
Oh my gosh. Yeah.
Yeah. And I went to Facebook because, we were all still on Facebook then. And I said to everybody, "Hey, everybody,
Hot
the
topic.
future of money is here. This is awesome. We don't have to worry about the central banks anymore and
Mm.
everything." And, my friend said, they said nothing. They didn't even
They said
react to the
nothing.
post. They didn't even there was no reaction. I was like, okay, we're still early.
I see.
So that's my story, man.
Cool. Okay. And then maybe could you explain like what you do right now at the quantum economics and how, you know, uh like as a business?
Yeah. So
Yeah.
when I left eToro in November 2019, I think it's probably one of the biggest risks of my life
Mm,
because they paid me very well. They like it was a nice salary
mm,
and it was a nice job. People that I've been working there for 7 years. I felt some people already like family.
mm,
Um, I had two kids and one on the way, and but I knew I had to make a change because I reached a maximum that I could grow within the company. There wasn't any further
mm,
promotion that I could get, not within a reasonable time frame.
mm, mm,
But throughout my career, I'd always been growing in responsibility and salary and everything like this. And I felt like the only way that I could break that and continue that level of growth was by making a radical change. So,
mm.
quantum economics was originally a Tumblr blog that I set up when I first set up Tumblr, and people really like the name. And people say, "Yeah, you should keep that name, and maybe make it a YouTube channel or something like this."
Mm-mm.
Okay, that's so that was uh, easy way. And there isn't, we don't really have any kind of one model, I would say. We have actually a lot of different revenue streams,
Mm-mm.
which include, analysis, content, research into cryptocurrencies. Everybody's always saying, do your own research. So we do that. Um, Advisory services, so helping new crypto projects find their wings and to push them for growth in every way that we can. Um, we've got about 20 analysts on the team right now.
Oh wow.
Many of them are thought leaders, social influencers, some of them with decades of experience in their specific fields like data science and venture capitalism. Some of them younger and just showing amazing potential and with social media followings of their own. Um, and we basically help each other out all the time on the different projects that we're working on, and
Mm-mm.
I'm probably involved in about 30 different projects. I'm advising directly
Oh wow.
uh, on Lunar Crush, which is a
Oh
social
no
media,
way.
yeah, social media listening tool. I'm advising on Electronium, which is promoting financial inclusion across Africa and Eastern Europe,
Mm.
and Luna Wallet, which is one of Barry Silber's projects, and they have an awesome following as well. So
Mm.
very honored by these type of things.
That's awesome. I so you must know the Joe from Luna
Joe
Crush.
Bazzani,
Yeah.
yeah, shit, yeah. When
I
I was
recently
in California, like
yeah.
I was able to see him. We didn't get to meet for long enough, but
Yeah, I
yeah,
recently got connected with him, and he's awesome. Yeah, I like him a lot, and I love the Luna Crush. Um,
yeah.
but
They have amazing product, and I'm not gonna give any spoilers, but they're coming out with some awesome features very shortly.
oh really? Awesome. Yeah. So okay, that's so I'm gonna actually just for the information to the viewers, I'm gonna put all the links in my description. So yeah, please check out the quantum economics. And there's actually a lot of Japanese people who actually run the Japanese crypto company are watching this, so they can potentially reach out to you and ask your advice and stuff like that too, right?
Yeah, Twitter and LinkedIn.
Okay,
Yeah, I'm available. Sure,
cool. Okay, so like if you need help, please reach out to him directly.
you
Okay,
got it.
yeah. So let's get into this like technical analysis. I get a lot of like requests from it. So I'm not technical analyst, and but this is my curiosity too. So I tried technical analysis like a years ago, and I was bombarded by this information and libraries of like patterns and tools, MACD, RSI, and all those things. And then I was intimidated, and then I was not successful. So like I kind of backed off. So I wanted to ask you this question: like, uh, what what kind of like a metrics do you use personally from, from
Yeah.
your day-to-day trade or yeah.
So I first started studying technical analysis probably around 2006, 2007.
Mm.
Um, and I would say that it is an extremely helpful tool, but very commonly misunderstood.
Oh, I see. Okay.
And I think that people like kind of get in their head that if they just follow specific patterns, they're going to make money.
Mm-mm.
And I don't think it really works like that. I think, in my career, and the number one piece of advice that I can impart to any person who's aspiring to be a trader is that um, the longer the time frame that you're concentrating on, the more consistent your results will be.
Mm.
Meaning, I've seen people make money in the short term, but very, very few without throughout my career. Maybe only a handful of clients were able to make, hundreds of thousands of dollars short-term trading.
Mm. When you talk about short term, like what, how short is it?
Meaning, I had one client who was very clever and had some very fancy machines, and he was able to turn like $2,000 into about $200,000. But then the
Wow.
broker that I was working for at the time decided, no, he's cheating. They clawed most of the money back.
Oh.
Yeah. So, but obviously he had an edge because he understood the world of trading very well.
Mm-mm.
It's not the kind of thing that a newbie could come up with. In eToro, I saw several successes. Especially there was one client who, with very high leverage, was able to catch a very awesome move in the euro dollar, a
Mm.
move where the euro dollar was falling consistently for about 3 or 4 months. And
Mm.
he just was shorting the entire way down with very heavy leverage, and he was able to buy several houses for his children. Um,
Yeah.
yeah, and so and that's off of an investment of five ten
Mm.
thousand dollars. So, but those kind of stories are very few and far between. And what's much more common that I've seen is where people just put up the money, they put the investment, and then they forget about it.
Yeah.
With zero leverage, don't leverage isn't required. And then you come back in 5 years and 10 years, oh wow, hey, there's a lot more money there than I had when I started.
Mm-hmm.
And that's usually the best kind of trading. And the trading that I've made the most money off of in my career, and specifically since I left eToro,
Mm.
I went from being a paycheck to paycheck person with a mountain of debt to now thank God you know financially independent and don't have to worry about work at a very serious level.
Mm.
And that's mainly from holding on to Bitcoin and altcoins, and just
Mm.
holding them within that time frame. And some of the ones that I was holding ended up appreciating 3,000, 5,000%. And when you do 3,000, 5,000% on an investment of $3,000, $4,000, we're talking about significant capital.
Mm.
So that's, I would say, if I'd been trading with leverage, you know the chances are that at some point the fluctuations in the market could kick you out. You lose your money,
Mm-mm.
right? And that's generally what happens. It's like it's like you're driving a car, right? And if you're
Mm.
driving at 130 miles an hour,
Mm.
150 miles an hour, eventually,
Mm.
whether through a fault of your own or somebody else on the road, it's a windy road. You might make a wrong turn, and one wrong turn and you're dead. So
That's a good
that's how I
analogy.
see
Yeah.
leverage trading. If you just drive the way you're supposed to, do the speed limit and observe the signs
Mm.
and drive gradually, you'll get to where you're going.
Mm-mm-mm.
You'll get there slower, but you'll get there.
Safer, safer.
Guaranteed. Yes.
So from that perspective, so I guess maybe you don't really like you do too much of like technical analysis or like or maybe just
So
checking all
here's
these
where the
metrics.
technical analysis comes into play. And
Yeah.
we have one analyst on our team who's quite interesting. She does astrology. Her name is Marin Altman, and she's a decent following on social media as well.
Mm.
And she's kind of tied, you know, Bitcoin into the world of astrology, which was completely new to me. But also, the more I thought about it, the more I said to myself, but astrology is much older. It's a much older science, and much more people ascribe to it in the world than technical analysis, for example.
Mm. Well, could you kind of explain what the astrology is too?
As it's basically like looking at the stars and the
Yeah.
planets to kind of understand what phase you are in your life or in the cycle.
Mm-mm-mm.
And obviously, we know financial markets kind of work on cycles. They have an origin point and an end point.
Mm.
So astrology can, especially once you know the point of origin, you can kind of understand the
Wow.
planets that govern specific. So she put out an analysis about Mercury retrograde, which takes place from September 27th to October 26th, I believe. And she said that this is very likely that Bitcoin can start a new cycle within this time frame. And now it looks like that's very likely. Now,
Wow. Okay.
obviously, I'm not about to go, oh, wow, Mercury retrograde, I'm going to go put all my money in. But
Yeah.
rather, I look at that within the context of what's happening on the charts, which on the charts is all over the place, right? We're talking
Mm-hmm.
about a range from $30,000 to $60,000. If you zoom out right now on the
Yeah.
chart, right? You say this daily chart. The support there isn't any real support other than 30,000.
Mm-mm.
And the real resistance is, if you want to be pedantic about it, 64,000 at the all-time high,
Mm-mm.
right? But between 30 and 60, I mean, that's a very, very wide range. And we've been narrowing in on that range all year,
Mm.
meaning that around the middle of that, right, 40, 45, that's where the 200-day moving average is. And we've been
Right.
consolidating in
Mm.
around that. And we hope that eventually we'll break that upward resistance point, right? And then the main resistance point at 64K is the all-time high, and that's where we get a lot of new news articles, headlines. Bitcoin is at an all-time high. FOMO,
Mm-mm.
blah 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 blah.
Mm-mm.
So for my part, because I'm not actively trading,
Mm-mm.
but I do have a lot of clients and contractors, meaning
Mm.
the analysts on my team, they're all contractors. I pay them sometimes in cash and sometimes in crypto,
Mm.
and the clients that pay me sometimes in cash and sometimes in crypto.
Mm.
So when the price is more expensive, I'm more likely to be sending Bitcoin, right, and
Mm.
less likely to be accepting it as payment. And
Yeah.
when the price is lower, I'll be much more eager to be,
Mm.
spending Bitcoin or to be accumulating Bitcoin and accepting it from clients, and less likely to send it to
Mm.
my contractors.
Mm.
And that's worked out for me very well so far this year.
I see. That the astrology part is kind of like mind blowing to me. It's just kind of like genius, like out of the box kind of like idea to like really see the pattern, recognition, I guess. But so I guess that there's so many tools, right? So many technical tools or the references that we can use. But so sometimes I struggle with this idea of like when to use like fundamental analysis. People call, for example, like we mentioned the Luna Crash, which is like a social sentiment data,
Yeah.
right? Like how many mentions or like how many retweets. So like how how do like how do we use that? Like do you have like a maybe advice on like when to use, how to see, when we see those data, like can we trust,
Yeah.
to like maybe could you comment on
Trust.
that?
Well, I have. several of the winning coins in my portfolio I have picked based on Lunar Crush data, and I think that the general principle that's guided me, two general principles, is one is the idea of gradually first and then all and then suddenly, right? Meaning that movements tend to happen very gradually, and you can kind of spot them on the chart where the chart starts kind of leaning and inching up, right? And then if you're able to catch it right before that, uh, giant, it'll make a giant spike up because there's that gradual, and then enough people see the gradual, and then that kind of has a snowball effect. It's not 100% though, because sometimes you'll see something kind of gradually moving up, and then it can crash, right? Or you can see something moving up forcefully, and then it turns out to be, a big nothing burger. So the second principle that I would say is diversification. And diversification is mathematically proven to deliver top line results with greatly reduced risk. Meaning that if you have 10 assets in your portfolio who are all expected to return, I don't know, say 10 times or something like this. And even if, 7 of them crash completely, and only one of them, does the, 10x, 20x return, and, another 2 or 3 of them do okay, you're going to be doing very well. It's the same thing that venture capitalists play. They play a very similar game when they're thinking about investing in startups. And especially these days where everybody's flush with capital, anybody with a good idea and a good head on their shoulders and is able to put a good team together can easily get money, because their strategy is simple. They want to invest in as much as they can, right? If they invest in 50 companies and they have one that turns out to be a Twitter, right, or an Uber, they're set for life, even if the rest of the 49 crash. So you don't really care about the losers in your portfolio if you have a winner.
Yeah, that diversification is definitely something that I started to focus on recently too. But so okay, I guess of course, like a technical analysis can be potentially useful, but also fundamental analysis, or like maybe social media data, like
It's my main focus, Yuski. My main focus is fundamental analysis. If you read my newsletter at quantumeconomics.io, as free of charge, and this is where you get plugged into what's happening in the news, and how does that affect the markets, and how can we use that to identify trends? Is there higher or lower inflation? And what are the main risks that are involved in the economy? Where is the next stock market crash likely to come from? Is the Federal Reserve about to raise interest rates? All of these things affect all markets, especially crypto.
Right.
And I think that a lot of people, they're not necessarily watching that, or it's not necessarily on their radar. And this is really where I feel I'm able to assist with my experience and watching central banks since the Great Crisis, and that's where I tend to focus most of my analysis. So you'll see a chart in there every once in a while, but even the concepts of technical analysis, if I can't explain it to you without the chart, I think is useless. Right? If I can explain to you about the golden cross, right? So maybe that's useful for you. But I could tell you what a golden cross is right here on the phone. I don't need to show you the chart. It's more helpful to have a visual aid. But if the analysis doesn't stand without the visual aid, in my opinion, it's useless.
That's a good point, I think. So like you mentioned about this, focusing on fundamental analysis, then I kind of want to switch the gear to like current market situation, which I think everybody's curious about, especially like a Bitcoin. Now it's everybody's just screaming over 50K
by the end of the year. I
So,
don't know how that's possible.
oh, okay.
Literally, I
Do,
don't
do, do you have
like.
any opinions on like,
I
what to
mean,
expect?
I've seen this happen before, and
Yeah.
we've seen such moves in Bitcoin. We've seen, especially on a percentage scale. I mean, we're talking about 100% move,
Yeah.
right? And we've seen 100% moves, uh,
Mm-hmm.
but not generally from an existing all-time high, right?
Yeah.
Meaning, that would be like in 2019, like seeing Bitcoin if it were up to, 15K or 16K, and then people were like, yeah, we're gonna see it. We're gonna see that 30K within 2 months.
Yeah.
Now, the second thing is that similar to, let's say, an earthquake, you can't really predict the financial markets. You can't predict a financial crash,
Mm.
a crash in the stock markets, and I don't think you can accurately predict when the price of Bitcoin is about to make another giant leap forward. We know that it's going to happen, and we know that
Mm-hmm.
earthquakes happen once every 20 years or so, but we can't say exactly when or
Mm.
what's going to be the trigger,
Yeah.
right? So predicting financial markets is much like that. We know that at some point we will see it happen, but we don't know exactly when. So when people say, okay, within specific time frame,
Mm.
you know, 3 months, we're going to see a movement of 100%. It's possible, yes,
Yeah.
but I'm not going to throw my hat in on this or stake my career on making that type of prediction because
Yeah. It's really
I don't
interesting because
have a reason to.
I was watching this obviously stock 2 for a model, right? Like Plan B, has been kind of like, and that's like a lot of people referring the 100K price
Yeah.
action to be. But also I was watching this interview with from Willie Woo. So he
Hmm.
was basically talking about this cycle is like a. He said like this is a last cycle. Basically, like structure is so different. So basically, he's like, we don't know what's gonna happen. Um,
Yeah.
Maybe you're in that camp, probably. Like,
I really respect Willie Woo. I was subscribed to his newsletter for a while until I realized the guy's always bullish. So even when, if you're always predicting that a bull move is about to happen, I mean, the market does go down sometimes. You know
yeah,
this, right?
yeah.
And Plan B, our firm actually did extensive research on Plan B's model.
Mm-mm,
It was requested by two anonymous clients,
mm,
more or less at the same time, which I thought was just a striking coincidence.
mm.
Both of which are large financial firms,
Oh wow.
and
Okay.
uh, basically the conclusion that we came to in both reports that were done by two independent analysts on my team,
Mm-mm,
which were working separately, was that the stock to flow model is one that can always work in hindsight, meaning that if you fast forward time, whatever the price of Bitcoin is in 6 months from now, very likely it will fit within the stock to flow model. So then you could look at it in retrospect and say, oh, yes, I
mm.
was right, or the stock to flow model was right, because now look at the Bitcoin price. Because it doesn't actually say, okay, at this point, the price is going to be this point, but rather kind of gives this range of outcomes. And
Mm-mm,
especially according to the mathematics within his paper,
mm-hmm.
we crunched the numbers and realized that this is a model that um, can be proven right given a very wide range of outcomes.
Mm-mm.
Um, which is not to say it's wrong, but rather to say it's correct.
Yeah. I was reading about this like article written by basically this idea put forward by head of the I think one of the guy from Fidelity Investment, and I
Hmm.
think his name is Julian something. And then he basically said that the stock to flow model lacks we don't really consider the demand side of the factor. So then like his prediction was a little bit lower. I think at least 2024. That's like a fastest time frame that Bitcoin can hit like 100K. So I was kind of curious. Well, like fascinated by the so many different ideas just coming together and challenge each other. But as you said, you know we don't know what's gonna happen, right? Anything, maybe price like a rally could happen, So what I was thinking, like, what could be the next catalyst for the next, Bitcoin, price action? What could potentially bring up to 100K? What will be the event that you might expect?
So, thinking about Bitcoin's great rallies,
Mm,
2013, 2017,
mm,
some extent, 2019 when it ended, finally ended the crypto winter, and we could all,
yeah.
uh, get back to the idea that this is a real thing and not dead.
Yeah.
Um, I think that the underlying theme is that there hasn't been a specific catalyst for the upswings,
Mm-mm.
but rather the idea of digital scarcity, where
Mm,
people in at those times had woken up to the value of digital scarcity
mm,
and had accumulated, and we saw in those times great supply and liquidity crunches where
mm,
everybody wanted to buy and nobody wanted to sell.
yeah.
And I think that the awareness, we'll never see another awareness bubble, right?
Mm,
Because everybody's already aware. There's nobody that's interested in money and doesn't know what Bitcoin is.
yeah.
It's already, people understand the value of it. People understand the
Mm-mm.
network aspect, the idea of transactional finality and
Mm,
settlement across borders in real time.
mm,
They understand, the advantages that it has over the current remittance services like Western Union and MoneyGram.
yeah.
So I don't think there's any, like, all of the low hanging fruit as far as awareness is kind of taken hold. So
Mm-mm.
I think that the next big upswing, and we could, and we, Yuski, I'd be very happy
Mm,
if we saw Bitcoin ranging from 30 to 60K for the next 12 months. That would not, like, I wouldn't even, that would be amazing for me, right? And
mm,
especially if I could see, a very clear low point and high point, because all I want to do is buy low and sell high,
yeah.
right?
Mm,
Um, so that would be, and when things are moving very, very quickly, it's very difficult to know, where's the
right.
high point, where's the low point,
Mm.
especially on, if you look at these graphs and all of a sudden we're in new territory. You can't predict the all-time, the next all-time high. If we're above, we're just sitting at 63, 73K,
Mm,
right? Try and guess the next all-time high. It's like throwing a dart in the dark. I mean, you can't know.
mm,
So I prefer when things are a bit more predictable.
mm, mm,
But if you're asking where the next upswing might come from, or downswing, I think that um, the only thing would be the accumulation and the
accumulation.
lack of supply in the market, and
Mm,
meaning that it would get to a situation where many more people are accumulating than are selling, and it doesn't always. It's not necessarily a eventuality in my mind,
mm, mm,
right?
yeah.
Especially since there's always people with built-in incentive to sell, given the way that Bitcoin is produced through mining,
Mm, mm,
and especially lately where we see a lot of investment money flowing towards the mining industry. I mean, they're going to need to at some point, or they're going to want to probably cash out.
right.
Um,
Mm,
so there's a balance that needs to be struck, and I think that we're right now
mm, mm,
kind of finding that balance.
mm. I see. What? So I was thinking about this. Like I read the news about the Bitcoin ETF, and then so some people so bullish on this. If this happens, then price is gonna rally. And
Yeah,
I don't know about this. I can see that like excitement come from, but also like it's we all know it's in the process. So
right.
I wonder like how can it be really like a like I don't know driver for the price action because we're gonna see the SEC's like a reaction, maybe within this year.
Yeah.
What's your view on this?
Well, well, speculators are going to speculate, that's for sure.
Yeah.
Uh, and look, we've been speculating on a Bitcoin ETF since March 2017 when the Winklevoss twins first proposal was rejected. And I remember doing an analysis at that time about it. And then we also saw that the Bitcoin futures markets that came online in late 2017, December of 2017, were late to the party. And some people actually theorize had a hand in the crypto winter and the crash that happened. Meaning that the futures markets allowed people to short Bitcoin for the first time freely. I don't know that the volumes there were significant enough to actually hold that theory. So we know that institutional interest in Bitcoin is extremely high. We know that from survey data and whatnot, but participation is very low. And a large part of the reason for participation being so low is that number one is the regulatory uncertainty, where people say, "Wait a second,
Exactly.
why would I get involved in this if the if the SEC is going to come and say, hey, why are you involved in this?" Right? Large financial institutions, they don't want to deal with that shit. They're like, "We're making money over here. We don't need it." They feel very sated, and I'm sure in the profits that they're receiving on a regular day from their regular operations. So what do they care? Whereas a retail investor, like you and me, we're more likely to take a bit of a risk because, well, first of all, we don't really care about the regulation all that much. We don't have much to lose. So I think that having an ETF will assuage those concerns from those institutional investors and say, okay, well, the regulatory uncertainty isn't there anymore because we have a product that's approved by the SEC and nobody's going to ever come and say, hey, why are you holding it? Hey, this is a paper that authorizes us to hold it without any specific questions about it. So I think that can certainly help with institutional adoption. But on the other hand, there's a well-known principle in the markets, a well-known saying which is buy the rumor and sell the news.
Yeah.
And therefore, we're probably going to get a lot of people speculating, the ETF is going to happen, and buying Bitcoin because they believe the ETF is going to happen, and then the ETF happens, and then let's say we don't get the massive institutional inflows that we're expecting on day one, and people could go, oh, wait a second, this ETF is a bunch of baloney, and then dump the price. I think that people with that kind of mindset, or whoever thinks that they're going to time it, maybe are being a bit foolish. Because they're missing the point, which is, the wealth accumulation over time and, investing rather than holding on to fiat money, which sinks by design. So, but the market is foolish very often.
Right. Yeah, the way I see is that, for example, like if institution really wants to get into Bitcoin, I mean, they have a way to, like, for example, Grayscale ETF, and I mean Bitcoin, trust, right? So,
Right.
but like, we don't really, they don't have like a premium right now, so it's the best time to really, go into that. But like, we don't see like significant companies or amount of money actually flowing into that fund, as far as I know. So
They do have decent flows, I would say, but
you would say?
also
Okay.
the other part of why institutions are hesitant is education. They don't understand enough about it. So a guy like Scott Minerd, for example, who's the CIO of Guggenheim, he got into Bitcoin earlier this year. And this is a man who's in controlling a lot of money. For him, I mean, I'm quite certain he figured out how to buy some for himself, right?
Yeah.
But for his fund, it's a bit more complicated, right? There's regulatory approvals that need to be made, and percentage of his portfolio that's allowed to be allocated. But then there's the idea of custody, right? And then you say for a financial institution, all of a sudden say, okay, well, we need to now be a security because, cybersecurity is a big threat to everyone. But financial institutions, they don't feel that threat on a real basis because everything in their system is made up, right? It's not real or tangible. So if a hacker breaks into their system and tries to steal, billions of dollars, it'd be like stealing a hologram, right? You can't steal what doesn't exist. Which is why Bitcoin hacks are so permanent because they reach in, they actually are able to grab something tangible and take it out. So whereas the financial institutions, they're very good at producing money and creating it. They don't have any kind of experience with custody, for example, and understanding how to hold on to that money. So I think that a Bitcoin ETF will give them that. But also on the other hand, I mean, we also have U.S. Bank, which is America's fifth largest bank, which just announced yesterday
Yes.
that they're about
Castle.
to. And this is huge news for the United States and the adoption of Bitcoin in the world's strongest economy. So, like you said, I mean, yes and no. There are ways that it's large institutions, if they are very motivated to acquire Bitcoin, but how motivated are they? So I think that the ETF will help with some of the less low-hanging fruit. So help with the ones who are very lazy and they just need to flip the switch of a pinky for trillions of dollars to flow in that direction, right? And
that's
and
a
I
good
think
point.
that, and we don't know how that's going to turn out until it happens.
I see. So I realize we are reaching the end of the time, but I wanted to kind of ask your opinion on the regulation because we touch on a little bit. So this is something that I'm kind of the two things. Yeah. One regulation, one like a U.S. kind of new law. So one concern is SEC might impose regulation on stablecoins, and
Right.
now like Gary Gensler mentioned that like SEC, well they're gonna consider like a
Yeah.
regulation then in the future, and I was like, okay, so what is going to be, and it just to me like I, I can't really wrap my head around like what would be the regulation, the impact would be, and the second
Yeah.
one is like an infrastructure bill in America, so that's like a controversial one, and I think that could have like profound impact on like a miners and like a stake pool operators and all that kind of stuff. So maybe could you touch on how concerned are you in those in for those like new regulations and infrastructure bill that comes out from US?
Yeah. So full transparency, I don't hold any stable coins.
Oh, you don't? Okay. Oh, okay. Yeah.
I never really understood the idea. You get all of the risk and none of the rewards. To me, it just doesn't make much sense. But I do
Yeah.
understand their value as far as a tool for the future
Yeah.
when institutional adoption, especially when we're talking about no risk funds, right? Like people who are invested in bonds, trying to take advantage of high lending rates within the DeFi market. I think that's the only way that they can do that is with stable coins. But to the point, we saw before Gary Gensler, there's a man who's a lot more powerful. He goes by the name Jay Powell or Jerome Powell,
John
the
Powell.
chairman of the Federal Reserve.
Yeah.
We call him Jay Powell. He was the one who mentioned on a call with the central banker of Japan and the central banker of England and Europe all on the same call. And that was like last week and a half ago. And he was the first one to call out, like raise a major alarm bell on stable coins because he was like, well, they look exactly like money, but they're outside of the regulation of money that we normally regulate. And from my part, I'm sitting here going, well, why are they outside of the regulation? They actually are not. They shouldn't be, and I don't believe that they are, according to my understanding of regulation. And I have a financial trader's license, so I know a thing or two about regulation.
Mm.
Uh, um, they don't. They should be considered by the current laws as regular money.
Mm.
And
Mm.
if the Fed were to take that stance, they would, first of all, they would have the same oversight that they do on regular money
Mm.
over stable coins. They can always launch a probe or an inquiry, as the SEC is doing right now for Circle, which makes complete
Yeah.
sense. Um, so they have, but they're looking at them as a kind of a foreign entity, and I think that that's incorrect. And the other part of the problem is China, right? Because
Mm.
China's already got their central bank digital currency figured out. They've been working on this since 2014, and
Mm-hmm.
Congress is very concerned about this because they feel like the U.S. dollar might actually lose out.
Mm.
So there's a simple solution, right? The U.S. dollar could lose its status as the global reserve currency. And the simple solution is to bring stable coins into the regulatory purview. So where does money originate? US dollars originate. They
Mm.
don't originate for the large part at the Fed level. They don't originate at the central bank.
Mm.
Where does a dollar? A dollar is born when somebody takes out a loan. When you go to your bank and say, "Hey, lend me $1 million,"
Mm.
and they go, $1 million in your account.
Yeah.
That's where the money was actually born, was at the bank, and they might have some reserves to
Uh,
cover that, but they actually created most of that money out of thin air. So if
mm.
they're already creating it through a centralized database, which is at the branch level, right? They're actually
Mm-hmm.
creating it at the bank itself, at your local bank. So
Right.
why does your local bank not have the power to create that money in digital form, right? In native digital form as a token,
Mm.
rather than through a centralized system?
Mm.
And in that way, you can also trace each dollar back to its point of origin. So let me ask you,
Mm.
why is one, Wells Fargo dollar worth the same as one JP Morgan dollar? That to
Mm.
me doesn't make any sense. That's basically what happened. That's what caused the Greek debt crisis in 2012, because one Greek euro was worth one German euro, and the Greek were going, "Hey, let me borrow as much as I can, please." And then the Germans like, "I'm not going to pay for that."
Yeah.
Um, so this is exactly what happens on a commercial level within the United
Mm-mm-mm.
States. It's called contagion, where if Wells Fargo would see financial trouble, like they would, the price of their shares would crash, and they would have to declare bankruptcy. That
Mm.
would bring the entire system down because it's all the same dollar.
Mm-mm.
So imagine a system now where a Wells Fargo dollar trades at 99.5 cents and a JP Morgan dollar
Mm.
trades at 101,
Mm-mm.
right? And that's just a much healthier system where, for me and you on the street, I don't care if I'm paying you $10 if it's a Wells Fargo dollar or a JP Morgan dollar. Honestly, I don't.
Mm.
I'll send you the $10 that we can, move on with our lives.
Mm-mm.
But at an institutional level where you have trading and stuff like that, it just makes for a healthier system. And that's how we beat China. Not by
Mm.
the Federal Reserve coming in and making a CBDC. That doesn't help.
Mm.
The Fed dollars at the central bank aren't the global reserve currency. They're not the ones that financial institutions in Hong Kong or Singapore are relying on. They're relying on the dollars that are already in the system.
Yeah.
So allowing the private sector to
Mm-mm.
take the lead
Mm-mm.
is what America is all about.
Mm. I like
That's
that.
what America does best.
Yeah.
It allows innovators to innovate and the government to regulate. And if
Mm.
they just take that adoption, and I know it's difficult for them because at some point they need to cede control,
Mm-mm.
right? And the government ceding control of money, that would be, that's a very difficult thing for them to do, right? But if
Mm.
they do that, I think that would be better for America and better for the world and create a much stronger global economy.
Yeah. I totally agree. Yeah. Let the innovator, let the free spirit, like an entrepreneurship spirit
Yeah,
that
don't
lives
give it to
in.
Mark Zuckerberg. They were right to block Libra. That would have made absolutely no sense. Honestly,
Yeah.
don't give that power to Mark Zuckerberg. But the banks, Visa,
Yeah.
financial institutions who are already there, the ones who are creating money.
Mm-hmm.
So let them explore, let them tinker. They know how to manage their own risk.
Mm. Yeah, I like that. Awesome. And I actually just realized it's already past the 10 and an hour. So yeah, I know I'm gonna, I guess, have to let you go soon. But
Yeah,
yeah, I mean, yeah, that was a lot of like a deep conversation that I learned a lot from.
good.
Yeah, and yeah, thanks so much for your time today. And I'm sure like a lot of Japanese people really appreciate that because it's really, first of all, they don't have like access to like your like insights like yours, right? So yeah, so please keep in touch, and whenever you have time, like feel free to come and maybe educate us in what's going
Yeah,
on.
man. Yeah,
Yeah.
it's an honor and a privilege. I really appreciate Japanese culture, and I hope to make it there one day.
Yeah, please. Yeah. Hopefully we're gonna see
Yeah, maybe after all this COVID nonsense is done.
that. Oh yeah. But yeah, but I'm actually based in, London, but yeah. So
Oh
maybe
yeah, I was invited to London November 10th. I don't think I'm gonna make it though. It's next week.
okay.
Probably soon. Probably soon though. I'll be in London. So
Yeah,
we'll
yeah.
see you then.
Awesome. So yeah, thanks so much for your time, and then so let's keep in touch.
Yeah.
Yeah.
See you soon.
Thank you.